Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today we are in December 4th. Between 9 and 9:45 GMT, I gave the part 1 of Tracking the Forex Market Together webinar. And now between 15 and 15:45 GMT, I'll present part 2 of the webinar. So it is a simple live market tracking technique. I was explaining to you how exactly the market can be tracked, identifying the type of moves simply using the live market code page, and also note down the initial lows and the highs around 3:30 GMT as that of the players, and try to relate it to that of the market and find out what they intend to do from time to time, and thereby we'll be able to take appropriate trading decision without any market fear, and thereby consistently be able to earn money from that of the market. Now, we are into that of the US session. So US session starts by 14:30 GMT. 14:30 to 16 GMT is the early US session. So during this time, I'm going to present the webinar. So before that, there was a gap time, 14 to 14:30 GMT. As I was explaining that gap time moves are false moves, and they made very quick drop in the case of Euro and GBP after making a big spike for whatever the reasons known to them. They just said that hawkish statement was made, and so that hawkish statement of Draghi has just made Euro and GBP to spike up. This is what the forecast was telling. But that was given beforehand, before that of the event. The forecast was telling the swing and firm up move will be seen. And exactly before that of the ECB press conference, they made the slide and pretended as if Euro is going to collapse in a big way. Then afterwards, they made one big volatile move, quickly gained and dropped, and that sort of move, they did it. And then subsequently from 14:30 onwards now, for 30 minutes, they have been consistently gaining the levels. So what we understand out of that, they are much above that of the initial lows and the initial highs. So what they have done, they have just gone below that of the initial low, came down to 1.2281, and earlier we know that during the European session, the low was 1.2295. So from there, they just made about 10 to 12 pips downward move, and then subsequently spiked up and went up to 1.2414. And this is the way they try to make the quick moves and then make this slide there. Why? Because after the rise, many people come and buy, and without understanding that there is going to be another event tomorrow, that is namely non-farm payroll. They will not continuously rise. They have to rise, hold higher level. Whatever they bought at the lower level, they have to book profit. And afterwards, they have to make a drop. That is why during that other gap time, from that of 1.24, they dropped it to that of 1.2330, and then pumped up again. So all quick moves are false move, and they just dumped all the buy positions, lightened their positions, and then subsequently slowly gained the levels. So this is the tactics they do it every time during that of the data release time. So whether the data is positive or negative, they try to give different interpretations and try to make such moves in the market. And in the case of GBP, that initial low they just breached, came down with a 1.5643, and earlier during that of the European session, it was around 1.5665, and then they made a small dip from there for 10 to 12 pips, and then started gaining and breached the high 1.5715, 1.5706. They breached and made an upward stop and come down. So you come across here again, it has come below that of the initial low. So what is their intention? Now, as I was telling you that GBP, they have been holding firm during the European session, keeping euro at a weaker level of 1.23. And now you find that euro has become stronger with 78 pips positive net change, whereas GBP is showing negative net change. So now they are handling the crosses. That is, euro GBP has just spiked upward. If you see the euro GBP cross, and you can understand that they just quickly gained the level 57 pips. It has gained and it has come to 79, 0.79 level. So this is the game of the players. So similarly, they just made one quick upward stop and above that of the initial high. In the case of USD yen, and went up to 120.15 and then started making the slide. Now you find that they are slowly firming up along with that of euro in order to gain substantially the levels in the case of euro yen. So 1.1717 pips, they gained it. And in the case of GBP yen, they nominally gained only 7 pips because GBP is in negative net change and euro is in positive net change and USDN is in positive net change. So they are making the contrarian move of this nature and trying to handle the respective crosses because that volume will come down in the market again because many of the traders will try to book profit and wait for the non-farm payroll release to be announced tomorrow and then commit positions. So that is the reason that the players handle the majors and then subsequently handle the crosses alternatively when the volume comes down. And in the case of USD CHF, they just came below that of the initial low 0.9768. Drastically, it has come down and holding below that. After going almost close to that of 0.98, they came down to that of 96.90 and still holding around that particular level because euro has already gained and corresponding move you come across, but euro has gained about 71 pips, whereas USD CHF has dropped only 60 pips. And then subsequently, when euro is rising, they will compensate by gaining the levels in the case of USD CHF as well. And then in the case of Canadian dollar, they are just showing positive net change. They made the downward stop and from there they have gone above and then they just breached the high and staying above that of the high as an extended move in order to make a slide afterwards in the case of USD CAD during that of the US session. And in the case of Australian dollar, they formed the new low 83.56 after coming down from here by about 30 pips. And then afterwards 86.57, I took a buy during that of the European session. And then they went up almost close to 84 level. And again, they are oscillating here with a negative net change in order to handle the crosses. So you find that mixed moves are happening or contrarian moves are happening in the market because one more event the traders want to wait. And why the players do it? They continue to create the uncertainty to that of the traders. They don't make any directional move for the simple reason if they show the directional move, then the traders will come and take all of them will take the buy positions. Then afterwards, there is no point in making a rise in the market because they have to necessarily make a drop and hit the stops on the lower level in order to earn money. So basically what is important is making money is important for the players, not showing the lower levels or higher levels or not having any affinity to that of ECB or BOE and things like that. They are simply money mongers. They wanted to make the money somehow. And for that, they create the market sentiment and they make the false move before that of the data release as if euro is going to collapse in a big way. And then subsequently, simply said, Draghi is hawkish. And what happened to the hawking news? It went up to 1.24. Afterwards, it is not gaining it. That is being discounted. That's all. No, it is momentary. And that is how they just create the market sentiment. And once all the short sellers go and do the short covering, and the volume comes down in the market, and only a few traders will hold the buy position, or they will try to take another buy position after the rise. So the players will hold and try to handle the crosses. So ultimately, what is important is we need to read the intentions of the players. When they are making such a volatile move without hedging, and even though they gained about 100 pips in the case of Euro, without hedging, if you would have handled it, definitely you would not have booked the profit. So ultimately, the trading strategy is vital. That's what I want to explain to you. So after seeing that, Euro is above that of the initial high, and GBP is below that of the initial low. Then USDN is above that of the initial high, but not in a big way, just about 10 to 12, 20 pips above that. And in the case of CHF, drastically down below that of the initial low. And Canadian dollar, they just beat the high and staying nominally above after forming a new high, 20 pips above, 23 pips above, and then started making the slide. And in the case of Australian dollar, which is below that of the initial low. So they are just handling the crosses. Because of that, they are holding above that of the initial high and below that of the initial low, etc. So ultimately, what we want to do, let us now look into that of the trades, what I have proposed during that of the European session. So during the European session, I was telling you that Euro and GBP are expected to make a swing and slide. And during that of the ECB press conference, they are expected to make a downward move and then start gaining the level. So I just kept 10 pips below that of the current market law at that time, 1.2314, I kept 1.2304 as the buy order with 1.2274 as the hedge order. They came up to that of 1.2281 and started spiking down. And once they started showing the profit in it, I kept stop at entry, and then quickly the stop was made into a trailing stop, and they went up to 1.2414 and came down and hit my trailing stop 1.2398. 94 pips profit was protected. Similarly, in the case of GBP, they were oscillating here. They filled. I kept a limit order 10 pips below the market, and that got filled. And then they came a little lower and then started gaining the level. And then again, I kept the stop at entry and made it as a trailing stop, which protected the profit. Similarly, in the case of Australian dollar, also the trailing stop was quickly moving up. I kept 15 pips trailing stop and made it as a 5 pip trailing stop once they stopped cutting the new high or the prevailing high. Then immediately the trailing stop got filled. So that we'll be able to find, in case if they make one more spike, we'll be able to capture another 30-40 pips profit. And for that, we can only have trailing stop. If we don't have the trailing stop, see, there are advantage as well as disadvantage using the trailing stop. So if you use the trailing stop just like that during the start of the move, then what will happen? They will make one quick rise and then drop. At that time, your trailing stop will be filled with a minimal profit. But you have to keep the stop at entry, wait for 30 minutes after the start of the move, and you find that they quickly gained up to 1.2390. Then you make it as a trailing stop. It will just be kept 15 pips below. Then once they go up, you'll find that there is an end. Then afterwards, the market comes down, so our trailing stop is filled. Otherwise, if you are smart enough, you can watch that new high is not being breached for 30 minutes. You can simply close it also. 10 to 30 minutes. When 10 minutes, if it is not breached, you can close it also with a profit. That is also a smart way of trading. So ultimately, the sentiment what they have created and what move they have done, if you understand, the market is full of manipulation, nothing more than that. And if somebody says that market is huge and it cannot be manipulated, that means they are cheating themselves, and also trying to misguide others. That is what I want to emphasize here. There is no question of bulls and bears fighting against each other and things like that. And if somebody is dumping at the lower level, you will be making huge loss, selling at 1.2281 and the market is at 1.2385. That person or the organization will be incurring billions of dollar loss. Can that be possible? They have a specific order and that will go and hit all the stops up to 1.2281 without filling any of the sell orders. That is why you find in the trading platform, if you keep a buy order at 1.2290, it would not have been filled because they have a specific type of order, and I do not want to give details of it. And they will simply expose all the stops, and then they will keep one buy order at 1.2350, which will accumulate all the cells which are being exposed and straight go up to 1.2350 level. With this is the way they try to create the bearish field and accumulate all the cells at the lowest level in the form of stop being triggered. And if you use the hedge order, if the hedge is being filled, and if you find in 10 minutes the hedging is not making profit, you can close it immediately and continue trading with that of the buy position. So what happens, it is not that we have to do the bottom fishing. At the drop, we have to buy. If you are smart enough, you can wait for the false move before the data release. Just 5 minutes before the data release, when they make a downward move, be confident, 100% sure that they wanted to make an upward spike. If they make an upward stop and before that of the data release, be 100% confident that they wanted to make a big drop after that data release or the ECB press conference or a speech or whatever it is. So they always make a false move beforehand. And this false move is mainly to create the last minute pressure on that of the traders. And every time they do it, and still traders develop the fear, and the traders have to learn the technique of laugh at them. Don't try to cheat me. I will buy when you are making a downward stop under the nature. If you say, then the players will be able to understand that traders have become smart. Till such time, you'll find that the traders lose the money in the market because they only follow the sentiment which are being expressed by others, and they are not able to read the intentions of the traders or the players. So, the most important thing is somebody is trying to cheat us. And unfortunately, the traders try to get cheated again and again, again and again, again and again on a daily basis. Yes, it is really unfortunate situation. Beyond that, I cannot tell anything. So how do we do the trading? It is a live market tracking. For that, we use the derived forecast, and market is expected to make a firming up move. I told you that swing and firm up, not a big rise. Swing and firm up will be seen during this time. And so we can take a buy during that of the dip. Otherwise, we can watch how exactly they are making the moves. And also we fine tune the forecast using the market reading technique. As I explained that they are holding euro above that of the initial high, they are holding GBP below that of the initial low and making small swings. So when they start making a swing of that nature, which will prevail for 2 hours as an extended move, and till such time, it is better to wait. And later on, now the time is 15 GMT, 15:19 GMT, and we can wait till 17 GMT so that they will finish all the sideways move and the contrarian move. And especially during that of the late session, they will firm up and induce the short sellers to go in for short covering, because a lot of traders will come and jump and buy after the rise, having missed the bus. So they will just create uncertainty for them and make small dips so that they will stop out and thinking that it is only a small pullback before making another big drop. So they will turn sellers. Then afterwards, they will firm up towards close and induce them to do the short covering. Then tomorrow they will set the initial lows and the highs and play with it of the traders. So they continue to manipulate the market. They continue to make up and down moves in the market and make contrarian move, make USD weakening move, USD gaining move alternatively, and create the sentiments to that of the traders. Now, the trading strategy. In the trading strategy, what we do is we always, wherever that we are taking a sell or a buy, keep 30 pips hedge order. Once we keep 30 pips hedge order, once we see 30 pips hedge order, in the event if the hedging is being filled, watch for 10 to 30 minutes. I'll explain to you with the help of the slide. Then I'll explain the type of moves. Okay. Watch for 10 to 30 minutes if the position is hedged. If the hedging is making loss, then close and keep another hedge order 30 pips away from that of the market and trail up to entry of the original position. So when the market has come down and filled your hedge and the hedging is making loss, close it. And if you become a smart trader, in 10 minutes you will be able to understand it is making loss. So there is no point in holding the hedging. You close it, but you have to minimum watch for 10 minutes. Instantaneously, you should not close the hedging. Watch for 10 minutes. The hedging is continuously making loss. Then you close it with 1 or 2 pips or 5 pips loss and keep 30 pips away, another hedge order, and then start trailing it when they take up the market upward until such time you are able to keep stop at entry in your buy position, so that when they suddenly make a drop, your buy position will be filled and closed, but you will not incur any loss. When they just drop it like that, don't worry about it. The position is not precious, because when they drop, you get a better buy level, so that you'll be able to buy it at a lower level and keep another hedge order, because your market reading says that they will take up the market on the upside. So you can wait for that to happen. And in case if the hedging is making profit for 10 minutes, then wait up to 30 minutes. If it is making profit, then okay, fine. That means the market has gone against me. So when the market has gone against me, then there is no point in closing the hedging. So we have to find out what sort of moves they are doing it. Okay. Whether the hedging is making profit because of stop hunt or a false move, that will happen in less than 30 minutes. So whether a downward stop hunt or a quick false move up to that of the low and then reverse, we have to find out. All quick moves are false move. Whenever there is a quick drop and in that process the hedging is filled, that means during that of the stop hunt or a false move or an extended move, they filled your hedging. You try to book profit in the hedging and keep another hedge order straight away in 10 minutes. And if it is a slow slide, that means it is an intentional move. Then when the hedging is making profit, keep stop at entry in the hedging, wait for 2 sessions and the start of the 3rd session. And during the 3rd session, they will try to reverse. What are this? In case if they just gone below that of the initial high, gone below that of the initial low during European session, then wait for the US sessions to start. That will be the 2nd session. The 3rd session will be tomorrow's Japanese session. At that time, they will make one downward stop and then reverse the market. So there is no question of simply going for the supports, because all the 3 sessions, they will try to make downward move, simply breaching the low every 30 minutes. Every 30 minutes, they will breach the low and go below, breach the low and go below. Why they do this? So that anybody who buys there, thinking that, okay, this is the support, will buy above that of the support, so the market can go up, but they will just come down and hit their stop. So ultimately, it is not simply trying to find out what is the level of retracement or something like that. Sometimes we may find that Fibonacci retracement, it will be of different percentage, because if it is an intentional move, then they will continue to do for the 3 sessions. And if you fail to recognize the sessions and simply look into only that of the levels, we become confused. If you follow the sessions, we'll find, okay, the second session, they've finished it in coming down. Third session, they will make one quick downward move and hit all the stops and reverse the market, start making an upward journey. That is what they do. Swing is the one which happens between the high and the low without reaching the high or the low. So what we do is, in the event, if it is hedged and the hedging is making profit, then keep 30 pips stop at, keep stop at entry in the hedging, and you trail the stop in the profit making hedging 15 pips away from the market after about 2 hours, because it can be an extended move, they will reverse. So after 2 hours, if you keep it trailing stop, you know that intentional move, they will not retrace. They will slowly come down, slowly come down. Similarly, intentional move on the upside, slowly cut every 30 minutes the high, but they will not retrace in a big way. So that your trailing stop of 15 pips will work and they will not hit it, and you will be able to see that your trailing stop get closed closer to the downward move before the reverse automatically. That way, you will be able to maximize the profit. After booking profit in the trailing stop in the hedge, you keep another 30 pips below the market, the hedge order, so that when they make an extended move, alternating with that of the intentional move, they will quickly gain the level. Extended move will be a fast move and quick move. So they will quickly gain the level. At that time, you can trail your hedging order upward, and you can either close your buy position with a minimal loss, or buy position with stop at entry, or book profit on the buy side also. So that is called either way trading. If you use the trailing stop effectively in profit making position, you'll be able to really book profit on either way moves of the market, because market means swings. It can go up or come down, nothing more than that. And if you have two positions, both the buy and the sell, and when you use the hedging, there is no additional margin taken by that of the platform. So you get the real advantage. But the only thing is, when to close the hedging, when to close the original position is vital. The decision making is vital. If you feel that you are struck with that of the hedging, that means your mind is not working. And imagine that somebody is having a buy position, you will be waiting for the market to show the profit and book profit. Somebody is holding a sell position, you will be waiting for the market to show the profit. Why don't you view it that way? Then you will be able, your mind will be able to understand that you are trying to act like two traders. One with a buy position, another one with the sell position. Both are trying to book profit in the market. So you'll be able to really understand and use your strategies. You can develop the strategies. It's not very difficult to understand. You can develop the strategies on your own using a trailing stop in a profit-making position, and use the hedge order when a position is making loss. You will be able to really understand what moves they are doing it, and extended the intentional moves, they alternate, and in between they make the false move, stop and the swings. That's all. Every time they make the same thing. But unfortunately, we are all being trained to perceive the market differently. What is that? What level it is trading? You compare it with that of 100 days before. Compare it with that of 200 days before. Compare it with that of 5 years before. But we want to trade in next 30 minutes. So when you are asked to compare it that way, we think that market is really bearish. So that is mainly triggering the traders, make the traders become a hesitant trader. And then such sort of hesitant traders invariably jump into conclusions after the event. They quickly go and buy euro after the rise, and later on see that the bus has stopped. That is the final terminal region for the bus. Then afterwards, when somebody has bought it during that of the quick upward spike around 1.24, you will be struck with a buy. And again, you will become emotional. And again, you will start searching in the web and searching, or asking all the people whether euro will go up or come down, euro will go up or come down. You will ask 100 people and 50 people will say that it will go up, or 50 people will say that it will come down. You will be in the confused stage. And when it makes tomorrow before the non-farm payroll, a small dip of 30, 40 pips, immediately you will close it with a fear that non-farm payroll might make the market to reverse. But later on, when the euro and GBP go up, you'll repent. This is what happens with many of the traders. So use your common sense. When it is available cheap, try to buy and keep hedging order to limit the risk. In the event if they go only 20, 30 pips below, you can book profit with the hedging, or you can stop out at the entry with keeping stop at entry and try to continue with it on the buy side. So this sort of understanding is vital, rather than simply telling that you will be a smart trader if you do the lowest level sell and buy trade. At the highest level, 1.40, when euro was trading, I was telling that sell euro and it is going to drop in a big way. But many of the people were telling it will go to 1.4347, etc. And they have been recommending buy and sell trade, because this is customary and it is a conditional response of that of the uh, analyst to recommend more and more of buy and sell trades at that time, because they will find that it can go to heaven. But later on, once it reverses, they will simply say the market has reversed, but that will be a late indication. By the time the trader would have wiped out the account, what is the use? We have to give the forecast beforehand, and nearly 75 to 90% of the occasions the forecast could come true. And that is why I'm giving the forecast on every Monday and free of cost, because I do not want the small traders to lose again and again. And during that of the Asian session live market analysis, I'm giving the forecast and expecting the traders to make use of it and make use of the trading strategy, and also use the hedging to limit the risk and maximize the profit, and do either way trades if possible if they make volatile moves. And also I have given the forecast that during that of the month of December and during the month of January, they will be making big volatile moves in the market as the year end and the new year beginning, yearly trend reversal move. You know that last week and the first week of the month, they make the monthly trend reversal. The yearly trend reversal move, you would have noticed how volatile they were making, and quickly rised and dropped all the way down and then again rise. So this many of the people would not have seen recently. And those who have been doing it for several years might be knowing it is a yearly trend reversal. They are going to make this sort of moves. But if somebody has seen only the monthly swings, etc., they will try to do the sell and buy trade after the drop, capturing about 20, 30 pips or 15 pips profit, etc. Suddenly, when they make a rise, they will just stop out. And afterwards, they see that they had dropped it again, which gives the real frustration for that of the traders. So don't be impulsive trader. Be a calm trader. You'll be able to really make good money from that other market, provided you understand how the opponent or the players are acting against. So they have to be cunning. There is no other way in the financial market to make money. And if some shopkeeper is telling it is a very good product, you have to buy and it is worth for your money, etc., you mean to say the shopkeeper is selling with a loss? He is keeping his markup, the profit. Okay, so but he will give a very nice stock to you. In the financial market, you find that nice stock is part of the game. And dig the hole behind you is part of the game. So you have to be alert and you have to be cautious and see that don't become subdued with it or don't become victim for such act. You use your common sense and intelligence and try to see that I'm not going to be hurt with this sort of changes, what they are trying to give it as sentimental change in the market, and I will try to earn with a common sense that whenever there is a good drop, I'll buy. Whenever there is a good rise, I'll book profit. It is simple. So if there are any questions with regard to the trading strategy, I'll explain to you. And during the US session, what trade? So there is, I explained to you that GBP is below that of the initial low, and they will come above that of the initial low after 2 hours. So the time is about 15:35 GMT. After 17 GMT, you'll find that it will go up and stay above there for 30 minutes. Afterwards, you can take a buy and then it will go up. Otherwise, they just made the drop during the start of the European session. We could have taken a buy there. Thereby, we'll be able to book profit during the small rise. So ultimately, what is more important is it is not the level, it is the timing. If you follow the timings of the market and the timings followed by the other players, you'll be able to really make good money. And unfortunately, in the charts and everywhere, you don't find the importance of the timings of the market, the early session, late session, gap time, etc. That is why you find, or you tend to believe in finding out what happens about 200 days back, or what happened about 100 days back, or 50 days back, and how exactly the currencies are making the moves. But ultimately, what is more important is that whether euro will be rising from here or dropping from here, so that I will be able to take a buy or a sell. It is simple. And from the start of the US session, they formed the high and not breached the high. So they are simply holding below that of the high, and they will make one dip before that of 17 GMT and try to create the confusions, and then later on go up. So either you can do a sell and buy trade for about 15, 20 pips or 30 pips profit, or you can wait for the drop to take a buy, and then they will close it at a higher level. During the mid session, they handle the crosses. For that, they have to make variable moves like euro in positive net chain, GBP in negative net chain, that sort of variable moves or contrarian move, they are likely to do it. And you can try to capture the profit during that time also. So I'm not recommending any trade for that of the US session at the moment, because I have to wind up the webinar by 15:45 GMT. And if I keep, I'll not be able to show the profit for you. So I explained to you how exactly you can do either way trades. Since the high has been formed and they have not breached the high, you can take a sell near that of the high and quickly keep the hedge order, and quickly when they make a small dip of 20-30 pips, you can book profit. Otherwise, if you are afraid, because it has gained more than 75 pips net change, so you can wait for the small dip and try to take a buy position. So they just cut the high by 1 pip, 2 pip now. So watch it carefully and then try to take the trades. Okay. So any questions? I'll answer the questions. Okay. Okay. Can you explain how you got GBP entry at 56.56? Okay, fine. GBP during that of the European session, the webinar is being recorded and that is available in FX Street. And the part 1 of the webinar, if you go to FX Street and click webinars, and there you find below that tracking the forex market together, part 1 is being displayed, and you just click and listen to that, you'll be able to find that. The link is also displayed in the chat window. And there, when euro was trading around 1.5665 and it was trading below that of the initial low, I know that they will be making a downward move before making an upward move. And so I kept 10 pips below that of the market. Yeah, buy order, that is 1.5656. And because they have to make the swings, and see, now they cut the high. Okay, if they don't cut the high in 30 minutes, that means it was a brief upward stop and to make a drop. So this is how you have to read it. And only with the help of the live market code page, you will be able to find it. And if you try to look into that of the chart, and the levels are marginalized, if you use 5 minutes chart, then what happened in 5 minutes will be shown in the candle, and the spur which is coming out will show the peak, and that may not show exact peak. And then, since you are not very familiar with the statistics, And invariably, you tend to believe that, okay, the candle is red and candle is green or blue or whatever it is, and then try to trade. So ultimately, if you use statistics, learn the basics of statistics and then try to use it. Just because somebody is using it, somebody is explaining it, if you try to use it without understanding, if you use it, it will appear nonsense. Any study for that matter. And if I learn about 10 or 15 German words and start using it in my talk without understanding the context, how it will be, it is similar to that. So unless and otherwise I become well versed with the language and then start using the phrases or the words, then I understand where to use it and how exactly I have to address. Then those words will give the real meaning. Otherwise, I'll think that I have been speaking in German, but actually I'll be making nonsense. Can I have your PowerPoint presentation? That's what I'm showing it, PowerPoint presentation. And so this webinar is again being recorded. If you go to FX Trade, and you'll be able to find out these webinars, recorded webinars are available there, and you can make use of it. And the slides are all shown. Okay, will next week start with a false down move? No, it is Shirley, Lamb Shirley. It is the last week, last month of the year. So throughout this month, they will be making volatile moves. So whenever there is a trend reversal, we can only do swing trades. They will be making consistent rise in the case of euro. But if you try to take a buy and wait, they may just go below and hit your stops and then go up. That sort of moves they will try to do it. So it is advisable to book profit whenever it is seen. Grab the profit. Again and again, they will try to revisit the levels. And in the case of Australian dollar, that how exactly they baked the volatile moves and slowly made the drop. They just make a drop of 25 pips and gain about 100 pips. Then make another 25 pips below that at the earlier low and gain 100 pips. That sort of moves they had been doing it in Australian dollar and really creating the confusion. Thereby, when you look into that of the chart will show that it will go to zero endlessly. But that is the way they have to make the market to appear so that the traders will follow such trends and later on take an understanding that such trends are not dependable. Okay, any other question, please? I'm not against the players or I'm not against anybody. Kindly understand, I'm trying to use some strong words in order to change your mindset, nothing more than that. In order to change your mindset, because there are many experienced traders and they think that what they have been learning all along using the chart and using the statistics without understanding why they are using it, they simply used it for several years and simply just because they used it for several years, they think that they have become experts without understanding the statistical meaning behind such analysis. Unfortunately, I hardly find any qualified statistician talking about such statistics and explaining how such calculations are being done for the common man so that the common man will be able to understand the importance of statistics as well as the limitations of statistics. Without understanding the limitations of the statistics, it is a simple, I can give a simple example. If somebody is kept 50% of the body in steam and 50% of the body is in ice, he is enjoying the warmthness of 50 degrees. If somebody says that using statistics, that is utter nonsense. So in the same way, we have to find out whether the statistics is being properly applied. So any other question, please, so that I'll answer to those questions. Otherwise, I have to wind up. Only 1 minute left. That's why I rushed it up. Okay. So in that case, I'll show the last slide. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and the contact details of mine are given here, so that if you got any doubt and if you are not uh, able to understand, you can contact me through email or Skype chat or Yahoo chat and ask me the questions. I will not convert you into a client. Be assured. And I will only try to motivate you, try to give you the appropriate explanation so that you get convinced, and later on you'll be able to trade on your own. I believe in you understanding the market and trading rather than I giving the calls. So Monday I got some other work. So Tuesday I will present Asian session live market analysis as usual, giving the forecast for the next week. Wish you all happy trading and try to get rid of the market fear and trade sensibly. Thank you one and all. See you on Tuesday.